These are 7 top stocks in after hours with big percentage gains today. While watching bullish after hours price actions, let us inform you our review on CHSN. Chanson International Holding is a bakery and beverage chain operator with a growing presence in both China and the U.S., running stores under brands like George Chanson and Patisserie Chanson. In China, they focus mainly on bakery and beverage sales, while in the U.S. it's more of a cafe-style setup with brunch, cocktails, and light meals on the menu. And after reporting their full year 2024 financials, the stock popped up around 60% after hours, which definitely grabbed some attention. So, let's break down what's behind the move. Chanson pulled in $18.2 million in revenue for the year, a solid 5.7% increase. But the real bright spot was China, where they opened 15 new bakery stores and saw an 18% jump in bakery sales. Those accounted for over 80% of total revenue. The China segment clearly carried the load, while the U.S. side of the business actually saw revenue drop about 29%, mostly due to store closures and stiff competition in the beverage and dining space. Now here's where things really turned around. Net income shot up from basically break-even last year to $0.8 million. That's a major leap, especially for a company that's still scaling. Gross margins did dip a bit, from 47% to around 39%, but they kept expenses in check, especially after closing underperforming locations and streamlining operations. One small but interesting highlight: they've started leaning more into freshly brewed coffee in China, clearly trying to ride the growing coffee culture wave there. That diversification could help drive stickier traffic going forward. Bottom line, Chanson's performance showed strong momentum in its core China market, solid execution, and real earnings growth, something small-cap investors are always on the lookout for. That earnings beat, the cost discipline, and the China expansion story likely explain the big after-hours pop. If they can keep scaling efficiently and get the U.S. operations back on track, this might be more than just a one-day move. Our review on SBET. SharpLink Gaming Incorporated is in the business of helping sportsbooks and casinos connect with sports fans in smarter, more targeted ways. They run performance marketing and affiliate solutions. Basically, they're the digital matchmaker between bettors and betting platforms. Through their SharpLink Israel unit and PAS.net affiliate network, they're all about driving high-quality traffic, converting users, and keeping players engaged for their iGaming partners across the U.S. and global markets. Now, with the stock jumping nearly 50% after hours, investors are clearly reacting to something big, either new developments or maybe just a long overdue recognition of value in the business. We don't have a headline press release dropping just yet, but moves like this usually suggest a catalyst. Maybe a fresh partnership, M&A chatter, or stronger than expected financials that haven't hit the wire yet. Keep in mind, SharpLink is playing in a red-hot space. As more U.S. states legalize online sports betting, the demand for customer acquisition and engagement tools is only going up. And SharpLink's got some serious names in their client list: NBA, NHL, PGA, even NASCAR, so they're not just dabbling in the industry. They've got real relationships. This after-hour surge could be investors trying to get ahead of news, or it could be a technical move catching shorts off guard. But either way, a 49% spike isn't something you see every day, and if momentum carries into tomorrow, we'll want to watch closely for any updates out of the company. If there's substance behind this pop, SharpLink might be turning a corner. Our review on IMAB. I-Mab is a global biotech player that's all about pushing the boundaries in cancer treatment. They focus on immunotherapies, specifically highly targeted biologics designed to take on some of the toughest cancers out there. Their pipeline includes a few standout candidates like uliledlimab, which works in tandem with checkpoint inhibitors to boost cancer-fighting power, and Givastomig, a bispecific antibody that's looking really promising for gastric cancer. Now, the big news hitting today and clearly catching the market's attention is that I-Mab has officially wrapped up its China divestiture, and the stock is popping up nearly 30% after hours. That's a strong move, and it tells you investors are liking this new direction. With China in the rear view, the company is now laser-focused on the U.S. market and advancing their late-stage pipeline, especially Givastomig, which they're pushing as a potential best-in-class therapy. What's important here is that I-Mab is not just realigning its strategy. They're also tightening the operation. They've adopted a capital-efficient model, and management says they've got enough runway to fund U.S. clinical trials into 2027. In biotech, that kind of financial clarity is gold. So this move isn't just about exiting one region. It's about sharpening focus, prioritizing high-impact assets, and leaning into a market where innovation is rewarded. Investors are clearly reacting to the stronger narrative. Streamlined operations, a pipeline with serious potential, and a solid balance sheet to back it up. If they execute, this could mark a real turning point for I-Mab's next chapter. Our review on BJDX. Bluejay Diagnostics Incorporated is a small but ambitious medical diagnostics company that's trying to make a big impact in a very critical part of healthcare, rapid testing for serious conditions like sepsis. Their core technology is the Symphony system, a quick, near-patient diagnostic tool designed to deliver results in about 20 minutes. Right now, their main focus is on an IL-6 test for sepsis triage, which, if it lives up to expectations, could be a game-changer in emergency care and critical settings. Now here's where things get interesting. This stock just popped nearly 30% today, and we're talking about a company with a market cap of under $2 million. That's on lower end of nano-cap. So when you see a move like this, it's not just about numbers. It's about speculation, momentum, and maybe a bit of hope that something's about to break in their favor. Investors are clearly reacting to the value proposition here. A tiny company with proprietary tech aimed at a huge, underserved market. If the Symphony system gains traction, whether through FDA movement, hospital partnerships, or even positive clinical results, it wouldn't take much to move the needle on this stock. But it cuts both ways. At this scale, volatility is the name of the game, and the upside comes with real risk. Still, for traders and investors keeping an eye on ultra-low float biotech names, Bluejay is the kind of setup that catches attention. It's all about whether their technology can cross that next milestone and whether the market believes they can scale from there. Our review on MITQ. Moving Image Technologies Incorporated is a small-cap tech and services company with its hands in the world of cinema, live events, and even esports. They're not just reselling gear. They're designing and building their own equipment, offering SaaS solutions, and even handling custom installations. So, it's kind of a one-stop shop for venues looking to modernize and streamline operations. Now, this is a tiny stock we're talking about, with a market cap just over $7.5 million, and it just jumped 17% after hours. Only about 594,000 shares traded, which tells you right away this is a low-float situation. These kinds of stocks can move fast on even the slightest spark, and that seems to be what we're seeing here. There's no massive headline behind this one, at least not yet, which makes the move feel more speculative. Sometimes it's just a case of traders rotating into microcaps or sniffing out something that might be brewing under the surface. Could be positioning ahead of earnings, a contract announcement, or even whispers of a deal. For investors, the upside here is all about potential. MIT is trying to serve niche but real markets, especially theaters and esports venues, with custom tech, energy management systems, and automation tools. If they land a major client or start scaling up recurring revenue from SaaS, this tiny float could get real attention. But at the same time, it's the kind of name where you've got to keep your risk hat on. Moves can be sharp in either direction. Bottom line, this pop puts MIT back on the radar. Worth watching to see if something more substantial follows it. Our review on WCT. Wellchange Holdings Co Ltd is an investment holding company that plays in the software space. Think custom software builds, cloud-based SaaS platforms, and full-service software development through its operating arm, CHSN. So we're talking about a company that's essentially trying to carve out a niche in a tech-heavy field, but it's still in the early innings. Today, the stock jumped 14%, and what's really wild is the volume. 208 million shares traded. That's not small potatoes for a sub-penny stock with just a $12 million market cap. When you see a move like that in a name trading at fractions of a cent, it screams high retail interest, possibly momentum traders piling in, and maybe even a few whispers or speculation about what could be brewing behind the scenes. Now, there's no formal catalyst being talked about right now, no big contract announcement, no flashy press release. But when that kind of volume hits a low-float name, it's usually not by accident. Either someone knows something, or it's become a hot topic in trading circles. That kind of flow can trigger a short-term wave of attention, especially when people are scanning for the next low-float breakout play. Of course, being in sub-penny land means risk is sky-high. These kinds of pops can fade just as fast as they arrive. But with a market cap still sitting around $12 million and volume exploding like this, it's definitely one to keep on your radar. If the company delivers anything concrete, new contracts, platform growth, even just a glimpse of recurring SaaS revenue, it doesn't take much for a name like this to start getting priced like it has some real upside potential. For now, it's speculative fire, but it's burning hot. Our review on MKDW. MKDWELL Tech Inc. is a microelectronics company focused on automotive electronics. Stuff like smart RV systems, laser radar sensors, and seat control tech for vehicles. They operate mainly through subsidiaries and offer both ODM and OEM services. Despite being a tiny microcap at around $3.16 million, MKDW just made a big financial move. They raised $10 million through a private placement, issuing 100 million shares, and also converted some debts into equity. That cleanup on the balance sheet, lower liabilities, higher equity, is a big deal for a company this small. The market seemed to like it. Shares jumped about 12%, even on low volume. Only 354K traded. That's not a hype move. It's more like a quiet signal that investors are paying attention. For anyone looking at small-cap turnarounds in the tech or auto space, MKDW might be one to keep an eye on. Please subscribe, give the video a like, and watch more from our playlist. Thanks.